Jay Ireland, President and CEO of GE Africa. Nice to see you in LA at the Milken Institute Global Conference.
Great to be here, thanks.
You are talking about what else? The opportunities in Africa. I always find it interesting in this vein in that for GE, it's been an opportunity for 100 years GE's been in Africa. What for you, a company that's been established, is the most exciting aspect of being there now?
Well, I think we have been there for over 100 years, and we've been there by business pretty much. Went in the late 90s, early 2000s. We really got big into the oil and gas industry, and that increased our employment level and business level in Africa to about $1 billion a year, give or take. We're up now. 5 years ago, I went to Nairobi. We're up to about 4 to 5 now, and it's across the board. Obviously, the oil and gas industry is struggling a little bit right now, but power generation, healthcare, aviation, transportation, locomotives are all very strong. So from that standpoint, we see growth in infrastructure, which is what we basically do.
So what's the trajectory then for revenue growth and employment?
Well, employment, we've gone from about 800 to over 3,000. 90+% of those are Africans. 2/3 of my staff are African. We continue to grow our executive capabilities. All of our businesses are headquartered now in Africa. So the growth is really, it's going to be a factor of obviously having the products, which are pretty much everyone has. It's a question of financing and getting the ability to finance power projects, hospitals, railroads, et cetera. So that's all a key thing now and what a lot of people are focused on.
So where do you get the financing from? You mean you have to...
Good question.
Yeah.
World Bank, other development banks, African Development Bank, commercial banks, also a lot of the export credit agencies around the world. So you basically pretty much for most of the project cobble together a bunch of different players, OPIC here in the U.S., Exim Bank. So all of those are really ones. And then you have to put it in the appropriate way where the returns match the risk. And I think that's some of the dislocation right now, is that the returns they're asking for a lot less risk through mitigation, but at the same point in time having a lot higher returns. So you got to balance that better, so the projects make sense financially and in the right appropriate mix of risk.
So what happens now with the oil and gas industry being in the shape that it's in?
Yeah, the oil and gas, I mean, the impact has been a couple of different ways. One is obviously the price of oil and what that does. But some countries like Nigeria and Angola, where the majority of their government revenues come from oil, it's a huge impact for their budgets on what they do in the rest of the country. It obviously has an impact on currencies, which has also put a lot of pressure on some of these countries as well. But again, it's somewhat of a short, if you look at the cycle over a period of time, the cycle wasn't above 100 that long either. So where the equilibrium is, it's somewhere, but and I think they've adjusted down, and they're doing the policy courses that they're taking and things like that are in reaction, are the right ones to go to. So I think it's an aspect of the demographics in Africa are, forget oil and minerals, just the demographics from a consumer standpoint, arable land, the capability of really having a lot of other exports, agriculture, et cetera. There's still a lot of growth there, and that's going to be what really fuels it, along with oil, mineral, the traditional stuff that people think about.
A few years ago, GE announced a very big investment in Africa, $2 billion. Where are you in terms of the cycle of that investment, and has it been successful the way you wanted it to be from what you've done so far?
We're still, I'd say, maybe 30% through that. We're investing in Algeria, in Egypt, Nigeria, Angola, South Africa, Ethiopia, Ghana, with physical facilities, as well as bringing on more people and doing a lot of work around skills building around the overall countries and stuff. So we're probably, I'd say 30 to 40% there. Everything's moving ahead. So we have the plan that we said by 2018, 2019. And so one of the key things is we do locomotives assembly in South Africa, and 55% of the locomotives that we're shipping now out of there are local content, local African content. So we're building out a supply chain base and skills across the continent as well, which is really a key thing I think you have to do in these emerging countries. You just can't go in and sell things. You've got to also fundamentally change the direction of the economies as well.
Jay Arland from GE Africa, great chatting with you.
Great, thanks. Good to be here.